So you've gotten pre-approved for a home loan, and so what's your next step in the home buying process? So I'm Rami Dhillon. I'm with Realty ONE Group Southwest in Temecula, California, and this is.
Alfred Ramirez from Impulse Capital Partners.
And so we are going to talk today more about what's the next step after you get pre-approved for a home loan in your home buying process. So, Alfred,
Yeah.
what would be the next step? So you've gotten pre-approved for a home
Next
loan.
step's the best part, Rami. Looking for the property.
Right.
And that's the best part, you know?
That is the best part. That's the fun. That's actually
That's
the
the
fun
fun
part, right?
part.
Yeah.
You know?
So how do you do that? So you're a new buyer. You're going to be buying your first home or even your second home, whatever it may be. What do you do?
Or maybe you're an investor.
Or an investor. What a lot of folks will do is go find a good real estate agent that is going to help them with the home buying process. So,
Yeah.
a lot of people, how do you find a good agent? A lot of people get referrals from friends, family, colleagues. That's usually sometimes the best way to do it.
Yeah, the best place to do it, get a good realtor, I would say, is referral based.
Right.
They're hard to find, unless you got Rami.
Oh, yeah.
But yeah, I would go with the referral. Somebody that's already worked with them and already
Right.
knows how they work, and make sure that they have your best interest in mind, because a lot of first time home buyers really don't know the home process.
Right.
And that's what we're going to start talking about. Is
Yeah.
well, what about the contract? What happens with that contract? How to do the negotiations?
Right.
When it comes into that.
So you want an experienced realtor that's going to help you guide you through the buying process as well as the contract that's involved.
Mm-hmm.
So the residential purchase agreement is what it's called. Has a lot of contingencies, and so you need a realtor that knows that contract really well to help you, through the whole process.
Yeah.
So, so the next step would be you find a good agent. Let's say you found them. Then you start looking for properties. Obviously you want to tell your realtor what you're looking for, what your things that you must have. Whether it be square footage, number of bedrooms, whatever you're looking for, location, school district, maybe that's important to you. Make sure your agent knows that. A good agent's probably going to ask you all those questions anyways, and get a little profile on you as to what you guys are looking for. Mm-hmm. So let's say you've done that. You've looked around, you've gone around looking at a bunch of houses, and then so you found one that you like. What do you do then, Alfred?
Now you want to put in an offer.
Right.
Now you tell Rami here, hey Rami, I want to make an offer on that house we saw yesterday.
Right.
And then Rami's going to go in there and well, what do you want to offer for that house?
Right. So obviously the seller's going to be asking for a price, right?
Of course.
Let's say, just to make it easy, let's say it's $500,000.
The seller's going to want $500,000.
Right. Seller's going to, or more.
Yeah.
Right.
But you don't have to offer $500,000.
Right. And you want to feel out the market.
Yeah.
Is it a buyer's market? Is it a seller's market?
It's a seller's market right
Right.
now. I mean, it's a buyer's market right now. Sorry.
Yeah.
It's not a seller's market. It's a buyer's market.
Right now it's more of a buyer's market. It's not like it was a year ago during the pandemic. So buyers actually have a lot more opportunities now as far as not just price, but what they can ask the seller for. So let's get a little bit into that. So you found the property you like. Mm-hmm. You're going to write an offer on it, and so your agent's going to guide you through. Okay, is the house actually worth $500,000? How long has it been on the market, especially right now?
Oh yeah, if it's been on the market for 90 days or more, I wouldn't offer them what they're asking.
Yeah. So what Alfred is saying is you've got an opportunity. The house has been on the market for 90 days.
Yeah.
It's just sitting there. Seller obviously still wanting to sell it.
Yeah.
It's still on the market. So you could maybe have your realtor do a market analysis on that property and see, is it really worth $500,000, right?
See what it's comping out to.
Right. What are the comparable sales selling for?
Yeah.
So you could come in maybe at $475. Or perhaps, right now, since interest rates have gone up quite a bit, perhaps offer the seller $500.
What are you negotiating though? Yeah, I was gonna say offer. You could offer them $500 and ask for the seller to pay your closing costs.
Right, closing costs, or maybe even help
a down payment.
Yes, or help them buy down the rate. Help the buyer buy down the rate. So because rates are high right now. And a lot of lenders are offering these 2-1
buy
downs where you buy down the rate temporarily for a couple of years,
Yeah.
and then and the rate slowly goes back up later, and the goal is to refinance. Anyways, so So you can ask the seller for concessions, meaning, hey, give me $10,000 in closing costs, 15, 20,000, whatever. There's a limit.
That's usually 6%.
6%.
Depending on the loan,
Right.
what you're doing on the kind of loan you're doing. I believe the max is 6%. If you're going FHA, I believe it's 5%. You know, so it all depends on the loan, what kind of loan you're getting. But max is 6%.
Right. So you when you write the offer, there's a few other things you got to think about. So now we establish the price. You talk to your realtor. Hey, what should I really be offering? And then what you feel comfortable with. Obviously, you're going to work out what the payment's going to be like with your lender. Say, oh, am I comfortable with paying $2,000 a month or $2,500 a month? And accordingly, you're going to base the purchase price on that. So what type of properties you're going to look for.
How much you can afford.
Right.
You know, that's what your main thing is how much can you afford.
So some of the main contingencies to be concerned about in an offer, which you can write with your realtor, is the three main is the loan approval, which is now is standard 17 days. Appraisal, which is standard 17 days, and the home inspection, which is now standard 17 days.
Yeah.
So,
and those are 17 business days, or are those 17
17
days?
17 days.
Can I ask for 17 business days?
You can ask for anything you want in the contract. You can write a contract however you like. Okay, as long as the seller agrees to it, you can do that.
You can put whatever. You can add contingencies if you wanted contingencies in there.
Everything's negotiable. So now, the contingencies are important because what you want to pay attention to those. So when you write the offer, can you hit those contingencies? Are you going to be able to do the home inspection within 17 days?
Yeah.
Is your lender going to be able to get the loan approved within 17 days? Are you going to get that appraisal within 17 days? It has to be reasonable. So that's something you need to talk to your lender about. Hey, can you hit these timelines for me? And let's say they can't. Okay, boom, you're good. So when you write the offer, those contingencies, then you're also going to ask for perhaps a few other things. You may ask the seller for paying for a termite report, and if you do, the lender's going to want to see the termite report. If it's in the contract, they're going to want to see it, and therefore, if there's anything on that report, like for example, let's say there's
termite damage,
or what else? I mean, there could be.
Well, if you ask for an inspection, you get that inspection done. Come find out, hey, you need a new roof or you need a new AC.
Right.
Well, now the lender's going to want to know, hey, well, how is this going to get done? Is the seller going to fix that?
Right.
And that's also negotiable. You can always go back to the table and be like, hey, there's a leak in the roof, Rami. What do I do now?
Well, the thing is, if you ask for something, if you ask for repairs, and I mean, and you obviously you send that to the lender, the lender's going to require that to be done.
Yeah.
Okay. So be careful for what you ask for.
Yeah.
So, okay. Now, getting back to the termite, it could not just necessarily be termites, the bugs, but also could be dry rot or something like that.
Okay.
So let's say $1,000 worth of termite damage, whether it be dry rot or actual bugs. So if you ask for the termite report, then that has to be addressed and fixed by the seller. So when you present that offer to the seller's going to look at that. Hey, am I going to provide the termite report? Am I potentially? What if my house needs to be tented? That's the $4,000 or $5,000 right there.
Yeah, but say in this contract, I'm giving the seller what he wants, and say I walk into the house and it needs a new rug or something like that. You know, there's spots on the rug, or hey, maybe it needs paint. Can I ask for the seller to pay the paint for me, or paint the house and recarpet it for me? And I'm giving the seller what he wants.
Well, so. That's a very good question. So, if you ask for it, and obviously you have to disclose that to the lender. Everything's about disclosure.
Yep.
If you ask for repairs, you must disclose that to the lender, and then if you do, the lender's going to require it be repaired. But
probably, minor stuff like paint, carpet.
Yeah.
Unless it's like really damaged, the lender's not going to care.
Right.
But I mean,
but if it's safety and hazard issues,
they're going to care.
Yeah. If it's safety and hazard, it has to be fixed. And if it's depending on the type of financing, if it's a FHA loan, definitely the appraiser might call out anything that's safety or hazard.
Yeah.
Okay.
Or the inspector's going to call out anything that's safety or hazard, as well.
Well, the inspector will call it out, but if the appraiser doesn't call it out, then it doesn't have to be repaired. But if the appraiser calls it out, then it's part of the loan. and then has to be repaired in order to get the financing.
Yeah.
So, that's part of the contract. All these things are something to think about when you're actually writing the contract. You got to think about the termite.
Yeah.
You got to think about potential repairs and all
Yeah,
that.
you got to
right?
think about what you want too.
Yeah.
I mean, you could give he could make an offer for maybe 450, and not ask for closing costs or not ask for
Right.
any down payment assistance or anything in that aspect.
Yeah.
So there's a lot of flexibility, especially in this kind of market, that you can start making offers on. Especially if the house has been sitting 90, 120 days.
Yeah. And that's true. If in this type of market, if the property's sitting for a long time, you can ask for less. Yeah. But one thing you got to question is it worth it to ask for $50,000 less, or is it worth it to ask for those concessions that help buy down your rate, and therefore your payments will be less?
Yeah.
Because just because you're asking for $50,000 less, if you work out the numbers, 20% down of 450, and then what is that number, right?
Yeah. But keep in mind though, if you're doing a 2-1 buy down, I don't want to get it too much into loans.
Yeah.
But if you're doing a 2-1 buy down, who's to say the interest rate's going to be lower in 2 years?
Right.
It might be higher.
So you are taking a risk.
You're taking a risk.
You're taking a risk. So don't assume that just because you're doing that 2-1 buy down.
Yeah.
That
it's a good opportunity to get into a property.
Right.
But the whole thing is, if I was a home buyer buying a 2-1 buy down, I would ensure that, hey, I can afford that property with the higher interest rate.
Right.
Just in case, hey, something happens in 2 years and that interest rate is higher.
Exactly. Exactly. So, all right, so let's say everything goes well. There's no termite damage.
Yeah.
There's no repairs. And loans approved after 17 days. Appraisal came in good at $500,000 or whatever it is. And home inspection is good. Then what you do, the seller's going to require that you sign off on those contingencies. You got to sign them off and say, hey, I'm good. So once you do that, you're all in. Okay? And so then after that, you move towards closing.
Okay, so once I'm done, I have my realtor make the contract, have my realtor submit it to the seller, and the seller signs it off. Okay, hey, everybody's in agreement.
They accept the agreement.
Yeah. So the realtor handles all that transaction, or does that go somewhere else?
Oh, well, obviously, yeah. So what the real estate agent is going to do once you have an accepted contract, a fully executed contract, he's going to send that over to the escrow company to open escrow.
Okay.
Okay. And we'll talk more about that on one of our later videos as to what escrow does.
Loan buying process 3.
What the purpose of an escrow is and what an escrow does. We'll talk that on maybe our next video.
Yeah.
And so we're going to open escrow, and escrow basically is a third party, unbiased party that handles the paperwork or part of the transaction and holds the money. Okay. And so so escrow will be open. It's normal transaction escrow is about 30 days. It could be.
You can ask for longer.
You can ask for longer. You could ask for shorter if you think you can close fast.
Yeah. Or if you're moving and you need to sell your house, maybe you want to ask for an extra 90 days or 60-day escrow or something in that aspect to give you time to sell your house or rent it out.
The only thing you got to think about is whether you can lock it right in for 60 days. Some lenders allow it.
You can lock it in to 120 days, but it's going to cost you
a little bit more money to do that. But I mean, if you need the time to move and look for another property, that's one option. If the seller's willing to give you that extended period of time, some are not. But in this market, ask for everything.
Yeah. Let them deny you.
Right. Exactly.
Let them say no.
Yeah. So you remove your contingencies. Then you're going to move towards closing. Lender's going to give you a clear to close once the loan's been underwritten and all the conditions are met, and then you get loan documents.
Yeah.
And then
you sign them and
you sign them.
The keys.
And then
usually 3 days after that.
Yeah. So and during that period, you also want to do your final walkthrough. Yeah. And you're going to schedule that with your buyer's agent, which is going to schedule that with the seller. And the final walkthrough, the purpose of the final walkthrough is not to walk through the house and call out any other repairs or anything. You're basically, the purpose is to make sure the house is substantially in the same condition it was when you first viewed it. And also, if you requested for any repairs,
those are done.
Make sure those were done.
And make sure that the seller has all his stuff out of the house.
Yeah. Yeah. Well,
because you don't want the seller coming back after.
Well, You want to make sure that the seller is actually, there's some evidence of him moving out, because now you're maybe a day or two before moving in and he hasn't touched anything. So you want to be cautious of that. Obviously, the seller has until the day of close of escrow to move out. So, I mean, if there's some stuff left in there, obviously.
Hey,
but if you
I'm
walk
come
in,
get this before you get your keys.
yeah, but if you walk in the day before and everything's still there, you got
a problem, because it's going to be your problem.
right. You want to ask the seller, hey,
The realtor's going to say, I got nothing to do with it.
right, right. So I don't know. I mean, that's a good point, though. I mean,
Well, there are cases where it's happened before.
Yeah,
There's
so-
actually a case here in Riverside where a person bought the house and the seller never moved out. The
Right.
seller was in there for about a year before they got him out.
Yeah. So we don't want to frighten you. That's not normal, okay?
Yeah, that's not normal.
That's not normal. I mean, things like that can happen. So I mean, if you do walk in,
That's why you do the walkthrough and
Yeah.
you're like making sure, okay, they're moving out,
Right.
or you're good to go.
So I mean, I guess essentially, if you do walk in the day before and you're doing your walkthrough and nothing's moved out, you might want to ask the seller what's going on and perhaps delay
an
the closing.
extension, yeah.
Delay the closing a week or so and say, hey, I'm walking back here. I'm doing another final walkthrough in about 5 days, and your stuff better be substantially
Gone.
out of the house.
Now,
yeah.
what if I'm an investor? Do I need a realtor to do a residential California form for me, or can I just write my own form? You know, if I'm not making offers on the MLS.
If the property, well, that's the point.
Yeah.
If it's not on the MLS, it doesn't matter.
Yeah.
So, but if the MLS, the multiple listing service, what we realtors use to list our properties on, if the property is listed there, you have to go through a real estate agent.
Yeah.
Whether it be the listing agent or your own buyer's agent.
Unless you have your own license.
Now, this is
You write up your
California.
own. If I was my own realtor, can I write up my own
You
contract?
can make sure you
Represent
disclose.
myself?
Yeah, make sure you disclose that you're a realtor.
Yeah.
Now, getting back to your question about
An investor.
if it's not on the MLS, and you approach the seller yourself, you can write your own offer. And it doesn't have to be. Obviously, it's not going to be on the California Association of. Sorry.
Yeah, because maybe I don't have access to it.
Well, it's copywritten. You can't use it. So you have to come up with your own contract, maybe talk to an attorney, and make sure that thing's tight. But I mean, it could be a napkin in California, as long as it's memorialized, it's in writing. It has to be in writing. It can be on anything.
Yeah, it could be on a napkin.
Between,
as long as you and the seller agree, and that goes into escrow. Escrow
Right.
has the seller's information and has your information and has some form of instructions to kind of go by. You know, how much earnest money is going to be deposited. You know, when the closing is. Stuff in that aspect. You could open it up with a napkin. Doesn't have to be a formal contract or anything in that aspect. You know? But I would always follow up with your attorney and see what they say.
That's if you're going directly to a seller. Yeah. So the California Association of Realtors Residential Purchase Agreement has a lot of safeties for the buyer and seller. Everything that you can think of is in there.
Yeah.
So you're protected. The whole purpose is that both sides are protected with all these different contingencies.
Yeah.
Now, when you're dealing directly with just the seller without a real estate agent, there's a lot to think about legally, and whether you're protected or not. Because there's no one who's going to guide you and say, "Hey, the seller has to disclose this, and where's your disclosures and all that."
Yeah.
And that's whole part of the process, which we didn't touch yet. And this is for another video. The seller has to provide you with disclosures within that time period when we open escrow.
Yeah.
And so, I'm there to guide you through that as a real estate agent. The
Seller's not have a good attorney to guide you through it too.
If you're going to do it yourself, make sure you talk to an attorney.
Yeah, and you don't need an attorney. Like I said, you just got certain guidelines you got to follow. And I mean, as any investor, you got to protect yourself. You know, you don't want to put in an offer on a house and then happen to go in there and the whole house is falling down. I mean, as an investment, that'd be a bad investment.
Yeah.
You know, especially if you're estimating $50,000, repairs and the house is falling down now, and you need a $500,000 rebuild.
Right. No, absolutely. Yeah, that's something to think about. Well, that's why you got your due diligence periods for the home inspection.
So don't do it on a napkin.
Yeah, don't do it on a napkin. And so, you guys, we basically covered the second step of of finding the property and writing the offer. We'll go into more detail on some of our other videos about escrow, earnest money deposit, the contingencies, and all that into more detail in some of the other videos.
Yeah.
I hope you folks enjoyed our video today. If you have, please give us a thumbs
A
up.
like, thumbs up. And I know we went through a lot of information. If you guys have any questions,
Yeah.
get a hold of me or Rami, and we can
Put it down in the
definitely answer.
comments.
Yeah.
Yeah. Subscribe to our channel, please. And we are going to be coming out with more videos on a regular basis.
Yeah.
And again, thank you for joining us. I hope you enjoyed it. And we will see you on the next video.
And have a happy new year.
Absolutely. Happy New Year.